Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's 587th video, baby. Yeah! Traders, this video is being filmed on Tuesday night for Trading Wednesday, May 19, 2010. Couple of things I'd like to talk about with you right off the bat. One of them is this: futures trading is risky and can cause substantial financial loss. If you do not have risk capital, do not trade the futures game. It's risky. But for those traders who do like to play, what do we have? The S&P is below OTAPMA on the daily and the monthly, traders. And I'm going to show you a few charts. If you ask me, looks like this S&P is about to fall off a cliff. I hope buying comes out of the woodwork. I really do. But I don't see it technically. I think we're going down again on Wednesday. Traders, beans are bearish as well. Soybeans are bearish. And why? Because the US dollar is king right now. It is really strong. Pullbacks were going to have to be purchased no matter what. Traders, right now, if you think about it, there is nowhere in the world to safely put your money right now, and they're pouring it into US dollars. Money is coming in from countries all over this planet, and the US dollar is just exploding. When dollars go up, it makes commodities worth less. Look at the oils, look at the grains, look at the meats. Most of the metals, well, I shouldn't say most of the metals, gold is just going through the roof, but even the metals are having a difficult time rallying with this really strong dollar. Imagine this: it was not 2 years ago that I stood here and said the Taj Mahal refuses to take the US dollar for entry to go see their museum. They won't take the US dollar. Well, you know what? Kiss our US dollar, baby, because US dollar is always king, even when it gets knocked down a little bit. Traders know where their money needs to go in times of turmoil, and that is here in the US. Nothing we can do about that. I don't make the rules. I just trade them. So, dollar's king makes the beans bearish and the S&P below OTAPMA. And with that in mind, traders, let me show you a few charts. Okay, traders, the first chart you are looking at is the NASDAQ June daily bar chart, and it is below OTAPMA once again. Traders, that's very worrisome because indicators, technical indicators on the NASDAQ are all clearly pointing straight down. We're now below OTAPMA, or the Omni Trading Academy's proprietary moving average. Got below it, settled below it. I do not like what I see. That's the NASDAQ. Let's look at the ES. Okay, traders, now we're looking at the E-mini S&P daily bar chart, the June contract. And as I mentioned on the daily, we were below OTAPMA. What's getting disturbing is we went below it on Monday, rallied back up, and stopped right about there. On Tuesday, we stuck our head up just a little bit, came straight down and settled down here, with OTAPMA being up here. That's 2 days in a row now below the Omni Trading Academy's moving average, and bearish indicators undoubtedly. This does not look good. Then we zoom out a little bit and we go and look at a monthly chart of the S&P E-mini, and here's that. Traders, on the monthly S&P, this is the monthly bar chart. Each one of these green bars represents a full month's worth of trading in the S&P. It got up to OTAPMA, stuck its head above it last month slightly, and broke severely. And we are trading right here, traders, with OTAPMA up here. On the monthly, as you can see with this monthly, it pays great respect to this average. When it breaks it, the breaks are usually pretty hard. When it gets above it, it stays above for quite some time. We are now below it. You can see the first time below, major break. We got up to it, failed, and broke again. That, my friends, is bearish as well. The dailies are bearish, the monthlies are bearish, the indicators are bearish. We have to be bearish once again for S&P on Wednesday. So there is a red Omni posted for the S&P for Wednesday's trading. Now we're going to look at a bean chart, traders. Okay, traders, you are looking at the soybeans July daily bar chart. Clearly there's a head and shoulders formation. Clearly we ran up and tried to test the head. Clearly it failed when it did that, and clearly we are now in a parallel channel working our way down. and it looks to me like the beans are going to continue in this fashion, in that pattern. The indicators are bearish as well, so beans look bearish. Traders, do your homework. Pull your indicators on the S&P, pull them on the Dow, pull them on the S&P long-term charts, pull them on the short-term charts like the weeklies and the monthlies and the dailies. I kid you not, it does not look good here. I hope buying comes out of the woodwork. Overall, we're still in a bull market when you look at S&P, but not when you look at this bad boy right here. That's shoulder, head, shoulder, failure to make the head test, breakdown coming our way. So S&P looks bearish on a short-term basis. Soybeans absolutely looks bearish for Wednesday's trading. Let's keep the bigger picture in mind for the S&P, however. It's a pullback for now. If it looks worse than that, we'll take it one day at a time and we'll make those assessments as the market marks time. So, you see those charts, traders? You see where we are below OTATMA on the weekly and the monthly in the S&P. Now the NASDAQ's below it. The transportation average has not pulled below OTATMA yet, but it sure is on its way. Traders, these markets look scary to me right now, but not in the long term. I think we're just going to have a bit of a pullback here. So far, you know the old adage, sell in May and walk away? Well, that would have done some good for you so far. Let's hope that changes. Anyway, red on me for trading on Wednesday. We'll see what happens with the S&P. Bonds, the volatility in bonds is through the roof right now. Options vol through the roof. Till those bonds cool off, we're going to have to stand aside from trying to sell them, and we'll let the S&P do its thing on the downside for now. Traders, I'd like to thank you so much for helping us with our site. We launched a brand new website for you traders with lots and lots of enhancements, especially future ones coming. Many of you have helped us out. You've called in bugs. You've been kind enough to write us emails. Round of applause for you Omniacs for helping us. We have gotten to many of your requests. Hopefully by the end of this week and through the weekend, we'll have covered 99% of the bugs that you've reported. I'm glad to say not too many bugs for a site that got brought up and thousands hit it at once. So far, so good. Thank you guys for all your work. All right, traders, give me a call anytime day or night, 702-629-4755. Please come on down to my site. It's www.livewithoscar.com. Jump into the free chat room and allow me to teach you how to be a better analyst, which should in turn help you to become a better trader. All right, traders, that's about all I'm doing in this video. We got a long week ahead of us. It's only Tuesday night. Make sure you do your own homework. Make sure you know that a stop is your best friend. Place your stops first. Never trade without them. And do your best to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.